This is Kimberly Reuter, business advisor and supply chain expert, and welcome back to my podcast, The Morning Mood. We are back for another episode of Ship of Fools. And of course, I have John Westwood here with me. And we are going to talk to you about what's going on in ocean freight. I don't think it's ever been crazier than it's been in the last few years. John is an expert in the space. And John, kick us off. Tell us a little bit about you and how long you've been in the ocean freight space and,
Yeah.
why we want to listen to what the hell you're going to tell us.
Yeah. Good morning.
Good morning.
Good afternoon, everyone. Yeah, John Westwood. Been doing ocean supply chain for the last 20 years. Worked at various forwarders and consulting companies, and currently help manage around 150 shippers procurement, taking them out annually and quarterly.
Nice.
So we're always in tune with the market and always trying to drive that value to our
That's
customers.
fabulous. That's a lot of shippers to help get maximum efficiency in the ocean freight. That's fantastic.
Yeah, it gives us a lot of good insight.
Yeah.
So we take all those shipper insights, try to boil them down. Again, so we can see across many shippers where most of us, right, only see one or two,
Yep.
and draw those insights to what we talk about today.
That's awesome. So you're going to talk to us about the dreaded Q4 is right around the corner. Actually, I think it's next week. And if you work in
Yeah, we're
e-commerce
here.
and retail, this is the beginning. Well, it's probably the middle of the shit show, but for some of you, it may be the beginning.
Yeah, I think, we're coming up on Golden Week,
Yep.
which is the first week in October. And that's typically, a week-long national holiday where the factories shut down
Yep.
and exports from China temporarily slow down. But it's also a great time to pause and kind of reflect about where we're going and where we think Q4 we're going.
Yeah.
So it's kind of that perfect moment to look at the headwinds of going into Q4.
Yeah.
So two things to probably impact today would be where the ocean market's going,
Yep.
and then talk about the USRT fees that have been popped up that start also in October.
Yeah, that would be great. Yeah, let's talk about Golden Week. For those of you who are new to supply chain or not in supply chain and just like listening to me talk, Q4 has historically always been one of the busiest shipping seasons. Kind of starts in September where people are getting ready for the holiday season. It's when we start getting a lot of congestion, rates go up, like pretty much the wheels start falling off on supply chain. And those have shifted after COVID, things have changed. But I still think Q4, September through Q4 is still kind of a crazy time. What do you think, John?
Yeah. So Golden Week is usually the most predictable,
Yep.
right? You get all the cargo loading in September. So you want to get the shipments here by the holidays,
Yep.
right?
Yep.
And then carriers will typically do like blank sailings. They'll manipulate the capacity to try to hold those rates.
Yeah.
If they're able to hold the rates through Golden Week,
Yeah.
that is a good sign for them for Q4
Yep.
that the rest of the rates in the air.
Yeah.
But what we're seeing from the market right now is that it's being tested. So on the surface, the volumes are actually pretty steady and freight is moving and the ships appear full, but prices for the first time in about 2 years, the contract rate versus the spot rate is now below the contract rate,
Ooh, this is always a very
right?
uncomfortable time for everyone.
Yes, very uncomfortable time for your shippers that, for context for them, a lot of a China-based rate to the West Coast was signed for about
Yeah.
$2,000. That has been a great value for shippers and our customers because the spot rates in the summer were 5,000,
Oh, yeah.
around
Two's
there.
pretty good.
Yeah, so two was great, but what we're seeing now is, carriers are starting to prioritize a little bit of market share over the profit, and we're seeing the NVOs come in with rates at about 1,500, 1,600. So for that first time, you have that dip of the spot rate where you can go out and buy on the open market
Yeah.
lower than your contract rate.
Wow.
And two things really is, the GRIs have stalled, meaning the carriers have not been able to push the prices up even during a typical time when they can.
Yeah. So from my perspective, and I spoke at this at a conference about a month ago, and it got tense.
Okay.
But the market has shifted so much, and the steamship lines have really been managing the market, though they don't want to admit it. And for the first time, we can start doing business like we did 5 or 6 years ago.
Yes, the market is definitely a little bit of an influx, and why I think we'll see some softer rates in the Q4, and what you're alluding there to is there's kind of some leading indicators. So we're not 100% sure where things are going, but when you're talking about the manipulation,
Yeah.
Um, Kind of four things are kind of leading to where we think we'll have a more, I guess, softer Q4 is again the front loading, right? Because of all the
Yep.
tariffs, right? People were not, they're not now. They moved everything in August instead of September.
Yep.
That was huge, right?
Yep.
The second piece is we are seeing the carriers being less disciplined. So typically during Golden Week and around there, right? Carriers are blanking about 28% of their sailings, right? So less ships, higher rates. It's around 12 to 15% now.
Okay.
So there is additional capacity.
Yeah.
And then the one thing that is we've seen before that is happening is that on paper, the utilization rates of these ships were around 85 and 88% recently. But they're only that high because the carriers had blank the sailings in the past. If you
Mm.
strip out those
Yeah.
load factors, it's closer to the mid 70s.
Yeah.
So, and then the one piece that we're really seeing in the last few weeks is some of these smaller carriers that have come in here, they are undercutting each other
Yeah.
and driving the rates down in the market. So those four factors for the first time are letting us think that yeah, this spot rate that is lower may impact some of the contract rates going in there.
Mhm.
But there's always, we've been riding up and down, so it's still unknown. But for the most part, this is the first time we've seen some headwinds again, where the NVOs and the spot rates are lower.
Yeah. And, there's really been this big shift. I don't know what happened and why, but part of this conference that I was at, what we talked about was that
Okay.
we didn't, there was, we've lost the focus on the shipper. The steamship lines, in my opinion, have become, they're no longer shipper friendly. They are, this is the way it's going to be. I think that the relationship has kind of broken a bit between the shipper and the carrier.
Yeah, I think there's two. I mean, there's where they're aligning with some of the larger shippers. They're aligning with the shippers that can give them the steady volume, the weekly volume.
Yep.
And I think the shippers that are maybe shipping under 5,000 cans, right? It's kind of the direct contract versus an NVO
Mhm.
where it is. Yeah, those are being less
Yeah.
prioritized. And there is more of the thought that I should make the profit on that
Yep.
box than, than honoring that long-term contract
Yeah.
with that shipper.
That's what I've seen too, is that there seems to be more of a focus on, yeah, profit. I mean, which they're in a business. You can't fault them for that, right? But there is less of a focus on long-term relationships and, what's best for the shipper. So it's a little bit disappointing, but it is what's going on with the market. So you're predicting, so you feel like we're going to continue to see a softening in the rates?
Yeah, I think, a couple takeaways, easy is I think, kind of expect some side by pricing to continue during Q4,
Mhm.
right? I think rates may drift and be a little bit lower.
Yeah.
If we do see some more discipline breakings, I think, the floor could quickly find the floor. What we're advising our shippers is simply right. The smarter shippers are continuing to kind of blend those three channels, right?
Yes.
Direct carrier contracts, NVOCC partnerships, and shippers associations.
Yeah.
So it's about diversifying, right?
Yes.
Way you do your stocks. And the big thing I think we're getting a lot of calls in is from the C-suite. Okay, the C-suites are reacting right now to the bunch of all these headlines that are coming out.
Yeah.
They're seeing the spot rate is below. There's a lot of noise and volatility in the market, and they're asking, hey, we're paying 2,000. Should I be paying 1,600?
Yeah.
You still have to maintain your strategy, right?
Yes.
You still have to know the markets are going to bounce up and down for the most part this year, right?
Yep.
And again, why that spot rate may look cheaper on the ocean piece, there are terms that usually come with it that are unfavorable
Yeah.
around detention, shorter free time.
Yes.
And then as you take away your volume from your regular contract, you may get reduction in weekly allocation.
Yeah.
And that in turns, when the market does turn or things get tighter,
Yeah.
your cargo will roll. So be prepared to answer the question from the C-suite,
Yeah.
but also we're maintaining our strategies again with these direct contracts, meeting our weekly obligations, and then anything above and beyond that weekly obligation, we may take out the spot market
Yeah.
or have a conversation with the carrier.
Yeah. No, it's a great way to look at it. And the market has changed so much. I distinctly remember when I started in the freight forwarding business many decades ago, like the rates were almost like annually set it and forget it. Like that was it. They were
Yep.
pretty stable. There were some accessorial charges, BAF and fuel. And we used to have terminal handling charges and stuff like that, that sort of fluctuated a little bit. But for the most part, your ocean freight rate Didn't move. It was pretty
It
predictable.
was pretty steady.
Yeah.
Yeah, it was
Yeah.
steady. It was, it used to be an annual event.
Yep.
We would start in March, April, and end sometime in May or June.
Yeah.
And those rates were held.
Yeah.
You still see that with the larger shippers. There's definitely conversations where in the past you may not get a peak season surcharge. It may have been a flat
Yeah.
surcharge. Uh, the conversation to open the rate with the carrier presenting you the option,
Yeah.
right, to open the rate, is certainly. So we are seeing a lot more of shorter term
Yep.
contracts. But overall, yeah, it's less of a set it and forget it,
Yeah.
versus managing it
Yes.
based on all the volatility that's going in the market.
Yep.
Uh, and then that includes what we're talking about here a little bit, the Chinese ship tax, the
Yeah.
301.
Yeah. And so, yeah, so diversification, you can no longer do it the way we used to do it all those decades ago. You need to be working with a variety of different partners, not just direct. I have had clients who only have direct contracts. It was painful, because you're at the mercy of that steamship line, and that is not a great position to be in. So I always, like you said, encourage people to have an MVOC and directs, in or a shipping agency, or shipping agent, makes it a lot better. So steamship lines, carrier contracts, not what they used to be before. What I do, where I lost my thought, is I do want to have you back, and I want to talk about in our next episode. I want us to talk about how contracts have changed. And now you and I were both at TPM earlier this year, and I mean, I had seen them before. I think a lot of people were a little bit shocked, who had not seen the new types of contracts that the carriers were offering. I would love to talk through that with you and what some of the benefits are these, because, even back in April, carriers were talking about variable rates.
Yeah, no, great. So yeah, the market's always changing. I think we're seeing various types of contracts being set up. So planning is happening now,
Yeah.
actually,
Yeah.
for the 2026 season.
Yes.
So now it's a great time to talk about those contracts, the different ones they fit,
Yeah.
and how they apply to the different size shippers.
Yeah, awesome. Yeah, I want to get into that. It would be perfect conversation, for our episode in October. So, what
Yeah.
else do you see on the market? We're coming up on Q4. What else do our shippers need to know about? There's some other things coming, right?
Yeah, no, I think the big one that is still being fleshed out, we do have some clarity, is the Section 301 maritime fees. We
Yeah,
we call it the Chinese ship
yeah,
tax. And so that is set to go here in mid-October. And what that is really a fee, that will impact any Chinese state-owned carriers or vessels.
yeah.
So, as you know, Washington always has those kind of go-to tools for tariffs on Chinese goods.
Mm-hmm.
You saw that with the de minimis
Mm-hmm.
exceptions
Mm-hmm.
earlier this year,
Yeah,
right? The Temu and the Sheen and all
yeah.
that,
That just happened.
where that just happened, right? And that's any direct consumer e-commerce under $800 is now subject to tariff.
Yep.
We've always seen the product tariff, right?
Yes.
But what we're seeing now is not the target on the cargo, it's the target on the ship. It's the first time the US is taxing not what is inside the box, but who is
Who's
bringing the
bringing it
box
to
over.
us?
Yeah.
Yeah.
And kind of what is here is that it is set up in a two structured fee. The first is the highest fee, which can anywhere between about $550 a box to $1,600 a box.
Wow.
It is for a Chinese operated vessel, and you really have two carriers in the market. You have OCL and Costco.
Yep.
They start at about $50 per net ton, and those fees ramp up over the next few years. And
Wow.
there's another one, which is not Chinese operated vessel, but if it is built, okay? And a lot of the vessels are built in China,
Yeah.
right? And those fees are, I think, like $18 a net ton.
Yeah.
Ends up being about $120 to $400 per container,
Yeah.
depending on how you look at it. And this was a big exposure that shippers were thinking was going to be passed on to them
Yeah.
starting in October. So what it really meant is you kind of had three tiers of carriers. You had the higher risk carriers like the Costco's and the OCLs. You had sort of the medium risk carriers, which were MSC, CMA, and Evergreen. They operated a large ton of Chinese built vessels. And you had some lower risk carriers like Maersk and Hapag-Lloyd that are a little more insulated and
Yeah.
really have no Chinese ownership or limited vessels. Um, so again, when we were doing the budgetings with our customers in July and August, we were telling people, hey, it could be a $400 increase starting in October on your ship on your per box container,
Yeah,
right? So on a $2,000
on a
box, 400
$2,000 box.
significant.
That's
Yep.
legit.
So what has kind of happened though is the market's kind of corrected itself. Carriers will be absorbing the cost, or they have been quietly swapping out vessels. Okay,
Okay.
Chinese built vessels
Yep.
for non-Chinese built vessels
Yeah.
to limit the exposure of those fees to the shippers, right? Because they were going to pass those on as a pass through. And then Costco and OCL have announced, for the most part, they are signaling that they are going to basically absorb those costs and rather than losing market share, lose some of their profit going forward. So the big news is carriers' costs are increasing,
Yeah.
but as of now, we are hopeful that that has not passed down to the
To the
shipper.
shipper. And so
Yeah.
for the people in the audience, for my Moody's who are not experts in ocean freight and supply chain and why all these things really matter is that every time we tack a cost onto a product coming into the United States, currently through these tariffs,
Yep.
and now so this would be in addition to the additional tariffs we're paying, we're going to pay more to bring the containers into the United States. What happens is that increases the cost of goods. That increases the cost of the toilet paper to get into the United States. And then that means one of two things are going to happen. The company who imported the toilet paper, believe it or not, we do import toilet paper into this country. That's why I use it as an example. The company who imported the toilet paper is either going to absorb it, and then that will impact their stock price because they will be less profitable, or they're going to pass it on to the customer, which is more likely what's going to happen because, as we all know, executives do not cut their pay. So, all of this for the consumers who are listening and why we talk about this so much and why it is important is it's going to hit your pocket.
Yeah. It's totally a downstream, right?
Yeah.
We're paying more upstream, more for the transportation cost.
Yes.
And if that transportation cost is going to go up 25% on this segment, right? It is strictly a pass through. So as of now, when we were doing the budgets, we really thought this was going to be a huge risk exposure.
Yeah.
The laws are still being kind of worked out, and there's not a ton of clarity, even though it starts in a couple of weeks.
Yeah.
So, a couple of things if you are a shipper listening to this, map all your carriers in your
Yep.
portfolios, identify those risks, right? Are you sort of in the Annex 1, Annex 2? What's your carrier
Yep.
base? And then even have those conversations about possibly rebalancing some of your volume
Yeah.
to maybe some of those carriers
Yeah.
in the future. And then the big thing is, continue to sort of monitor what Washington says. That's kind of a daily thing, I think, for everyone in supply chain today,
It is.
right? Like,
Every day is new.
wake up, see what happens,
Yeah.
right?
And we're all
That's
looking
kind of
forward to
it.
November when the Supreme Court hears about the tariffs. And I think
Oh,
I
yeah.
actually just
It's probably the biggest.
wildest thing I just read this morning is that there are investors that are actually buying up the duty, banking on the refund.
Yeah. They've been buying it at a reduced cost, hoping that they've been placing the bets. That's been going on since the summer.
Oh, has it really?
Uh,
I did not.
some really smart people. I think now they're coming forward, have bought, bought the idea that the Supreme Court will overturn it.
Yeah.
So it'll be interesting to
Yeah.
see what happens here. And I think either way, right, they will be some type of duty or tax, just how it's presented going forward.
Yeah. Yeah. Like, oh, God forbid they just rename it. Um,
Yeah, that's it. They just put it under a different bucket.
that would be the worst. All right. Well, thanks for your insight today on what's going on in ocean freight. Very informative. So, just to recap for the audience, spot rates are very attractive right now. Probably should be looking at those. If you've not gone out to see what's going on in the market, might want to take a look. Golden Week is right around the corner, so you need to be prepared. We always see a dip in exports. And this will, as you said, will indicate hopefully what we continue to see for Q4, which is a continued depressed rate, hopefully.
Yeah, we'll see.
Yeah.
We'll see. So I think this will be a good headway to where we end up for the rest of the year and then head into contract season,
Yeah.
which we can talk about next time.
And for Chinese owned carriers, do your homework. Figure out who you're carrying with. For right now, we're not seeing it hit the shippers, but eventually it probably will. So now's a good time to get your ducks in a row.
Yeah, be prepared and understand the exposure, I think is a good
Is a
takeaway.
key piece. Awesome. As always, John, thanks for being here and sharing your valuable insights. And we will see you again next month. We're going to talk about what is going on in the crazy contract world with ocean freight.
All right, thank you.
Thanks.